my coaching classes. In the 12th standard, the first topic is the final account. In the last lecture, we have to see the types of capital account. There are two methods of capital account: fixed capital and fluctuating capital. In fixed capital, there are two accounts are open: partners capital account and partners current account. All adjustments are made to the partners current account. Second, fluctuating capital method, and there is only capital account is to be maintained. All adjustments are made to the capital account. On the capital account credit side, first by balance brought down, then by interest on capital, by salary or commission to partner, by additional capital introduced, or by net profit during the year. Debit side, to drawing, to interest on drawing, and to balance carried down final, and this balance taken on the liability side. In 11th standard, we have to prepare final account, but there is a sole trader, one man person. Here minimum 2 and more than 50% should be there. In a final account, we have to prepare trading account, profit and loss account, partners capital oblique current account, and balance sheet. These are the three accounts. Every account has two sides. Left hand side is known as the debit side, right hand side is known as the credit side. Trading account is the account we show the all direct expenses, purchases, sales, and expenses related to the production and purchases. It is known as the direct expenses. Trading account is to be maintained to find out either the gross profit or gross loss. On the debit side of trading account, first item is the two opening stock, two purchases, less purchase return, in adjustment, sometime given unrecorded purchase, then it must be added, and then take a total the outer. Then direct expenses means two wages, two royalties, two factory rent, works manager salary, power and fuel, import duty, octroi, any manufacturing or factory expenses is a direct expenses, and they are taken to the debit side of trading account. In a credit side, credit balances are taken by sale, less sales return, then add unrecorded sale given in adjustment, taken outer column. In adjustment given good distributed as free sample, taken trading account credit side. Good destroyed by fire given in adjustment, taken on the trading account credit side. Goods withdrawn by proprietor for personal use, it is known as a drawing, are also taken on the credit side. And then last one is the by closing stock at the end of the year. Then you have to close the trading account. If the credit side is more, then on the debit side you have to write down to gross profit carried down. And if debit side is more, then you have to credit side write down by gross loss carried down, by gross loss carried down. By this way you have to first prepare the trading account. After preparation of trading account, we must have to prepare the profit and loss account. There are two types of expenses, direct and indirect expenses. Direct expenses taken to the trading account, and for running the business other expenses are incurred. It is known as the indirect expenses. It are taken to the profit and loss account debit side. All expenses are taken on the debit side. All income and gain always show the credit side. Trading account, instead of trading we have to prepare profit and loss account. Debit side, normally which item is given? To salary, to office rent, to printing and stationery, to discount debit balance, to commission, to insurance, to sundry expenses, to advertisement, to office expenses. Then you have to prepare the format to bad debts plus new bad debts. New bad debts means it is known as a further bad debt plus new RDD, reserve for doubtful debt, taken inner column, total also take inner column, less old RDD means in trial balance credit provision for doubtful debts is given, it must be deducted, and then take outer column. All indirect expenses, salary, rent, printing and surgery, discount, commission, insurance, sundry advertisement, ऑफिस एक्सपेंसेस और भी जो कोई खर्चा रहेगा रिमेनिंग आर टेकन ऑन द डेबिट साइड. डेबिट साइड ऑल्सो कम्स टू डेप्रिसिएशन. व्हाट इज द कम्स टू डेप्रिसिएशन, टू लॉस बाय फायर, टू फ्री सैंपल इन एडजस्टमेंट गिवन. These also extra item are taken on the debit side of profit and loss account. Credit side of P&L account, all item is taken outer column. If adjustment is given, then take in inner column. Otherwise, it take on the outer column. If there is no adjustment, take on the outer column. Then credit side by gross profit brought down means trading account brought profit carried down, taken on the profit and loss account credit side. By commission received, any received item means credit balances is our received. By commission received, by discount received, by interest on investment, by dividend on shares, etc. Remaining income is taken on the credit side of profit and loss account. Then you have to close the profit and loss account. If the credit side is more, then on the debit side you have to write down to net profit transfer to capital account. And if debit side is more, then on credit side you have to write down by net loss transfer to capital account. This net profit taken on the credit side of capital or current account, and if there is a net loss, it was taken on the debit side of capital or current account. Then you have to maintain partners capital account. I have already shown you last lecture partners capital and partners current account. On capital credit side by balance brought down, debit side to balance credit down taken on the liability side, and all adjustment made to the current account. Current account credit side by balance brought down by interest on capital, by salary or commission to partner, and by net profit. Debit side to drawing, to interest on drawing, and finally to balance carried down, and this balance also taken on the balance sheet liability side. Then balance sheet. Balance sheet is not an account, it is a statement of assets and liabilities. It is known as it shows financial position of the business. Balance sheet is a statement showing financial position of the business. Balance sheet as on dash two sides, liabilities rupees, assets rupees. Liabilities rupees means amount rupees, assets amount rupees. Balance sheet has no left debit credit side, it is a statement. Actually left hand side is the credit balance, right hand side is the debit balance. In the liability you have to write down capital account. Suppose A and B are partner, take the total outer. Current account is given then, if not given then you have to take capital account A and B, take the total outer column. Then sundry creditor, bills payable, bank overdraft, outstanding expenses, income received in advance, reserve, any reserve is given, general reserve, these are taken on the liability side normally. Then on the asset side, that is a goodwill is our intangible assets, plant and machinery, P&M, inner column, less depreciation given, then take outer column, land and building, inner column, less depreciation, then take outer column, furniture and fixture, inner column, less depreciation, outer column, then motor van, inner column, less depreciation, outer column, freehold premises, patent, trademark, these are also taken on the asset side. Other asset, cash in and cash at bank. Asset side there is a debtors, then bills receivable, cash at bank, cash and bank, prepaid expenses, these are, and closing stock. What is the closing stock? These are taken on the balance sheet asset side, and then you have to first close the trading account, find out gross profit, GP or GL. Credit side is more than gross profit, debit side is more than gross loss. Then profit and loss account, net profit or net loss, net profit credit, net loss debit. Then capital balance taken on the liability side, and then balance sheet closed down. This is known as a partnership final account. It is based on the 11th standard final account. In 11th standard there is only one person's capital, this is the sole trader capital. Here minimum 2 partners capital is to be given, and you have to prepare this final account. And in annual exam they have 12 marks. It is a compulsory question, that is a final account. Thanks.